how it goes is they all connect underneath the building. They connect, and then from outside the building to the city is one pipe. If you do have another main drain line, like two of them come outside the building, they'll usually tie in with each other out in the middle of the yard or whatever. But this particular one, man, this thing just kept going and going, so I really don't know. I'm not saying it's like a bad thing. It's just for me to give you an estimate to clean it, because my flex shaft is only 75 feet long.
Got it.
Okay.
So it's just unusual because it's so long.
So we would have to go out there, install a clean out in the middle of the field to be able to do the other half of it, on that one side. And then I might have to do it for the cast iron that's on because that thing is like 111 feet. This thing's 75 feet, the flex shaft.
Got it.
Okay. And it even like I still have to do some like the jetting. The PVC needs like jetting it.
Got it.
That's all right. Well over 100 feet, but if you can't get that distance, then you have to install a clean out to go the other distance.
Right.
So that's why I got to sit down and give you an estimate.
Yeah, I got you. So it doesn't sound like there's anything super major. I mean, in terms of like the PVC cracking or in terms of some of this.
No, but this stuff will cause you issues, though. You will have stoppages for sure. You have so much dirt, rust built up, rust chunks in the line that simple things as toilet paper is going to catch on to it and just cause an issue. There's sections of the pipes, both pipes, where water is just kind of standing still in the bottom of the pipe.
Got it.
Because of the fact of all the built-up on the pipe, it's making the pipe kind of level and not giving it the fault. So you will have issues for sure.
Got it. Well, then I think definitely when you give me the quote, I mean, why don't you price me one of like, hey, if we clean it, but I want you to price me one if we either replace it or put new, you kind of described like a new flex thing that you would put in it. Like, I don't want to go into this thing and, a year or two from now have some huge plumbing issue. I'd rather have it dealt with up front and negotiate that in. You know what I mean?
Yeah.
So, all right, buddy. Well, then I got to hop into a meeting, but the sooner you can email me that estimate, let me know, and then swing by. Let me know when you want to swing by and I'll cut you a check. Otherwise, I can send you via Venmo or something like that. So.
Yeah, no problem, buddy. Let me, I gotta go knock out this job, this stuff, and later on I should be free today, this afternoon.
Okay, man.
And then I can sit down and do all this stuff for you.
Sounds good.
I'll just email and give you a call or text.
Appreciate it, buddy. All right. All right, we're connecting here live on Facebook and Zoom and all that good stuff. Good morning to everybody on our team and side hustle people that watch on demand and all that good stuff. So I hope everybody's having a great day so far, a great week, enjoying, depending on where you're at, enjoying this beautiful, beautiful Florida weather. So what I want to do this morning, guys, for our training, I thought about this and I really think this is going to be a good one. So, and I like that we've got some of our veterans on here, a few of them. least we're blessed with Tony Mello. Craig was on for a minute. I don't know what happened to Craig, but I want to talk about tips and tricks to get the best pricing for auto, home, and commercial insurance. So we're going to kind of skip over hey, there's the sales contest. Tony's going to be in the Hawaiian skirt and the straw hat and the coconut bra, all that.
Don't laugh about that, Doug. When my dad was wrestling, that was one of our gimmicks.
Listen, I want to do it. We're going to do an interview. I know we've got a super secret spot where Tony's going to go, but I want to do an interview, Tony, with you like that. I was thinking about that. I think it'll be really funny. But anyway,
bring it back to my middle school glory days of coming out to the wrestling ring.
Yes, I like it. Sounds good. We can make something really funny on that. We got to have fun here, people. We got to spice up insurance the most we can. So good morning, Roy. So, we're not going to jump into all of our sales contest and JJ says he's out, and all the other stuff. I really want to make this a very practical meeting that somebody can also watch on demand that we can share on our YouTube channel. And here's what I was thinking about. And I'll tell you, and I'll share a personal thing in a second or experience with my own auto, but I want to talk about tips and tricks for getting the best pricing for auto, home, and commercial insurance, right? And so here's my thought. When we talk about insurance, okay, we have access to over 50 carriers conservatively, depending on, what lines of insurance we're adding in and looking at. And those of you that have been in the business long enough know that I could see two quotes from the exact same carrier that could be vastly different. Would you agree? Who would agree? Can I get an amen?
Amen.
All right, thank you. Making sure my people are. So part of our industry and part of really being a professional in what you're doing is understanding all the levers you can pull to make sure you're not getting beat by some schmo down the road who knew more than you about how to get the best pricing with the carrier, right? Now, some of this will also say, look, if I'm talking and saying I'm quoting 500,000 in coverage on a home and someone else is quoting 400,000 off the board, we know that's going to be different. And I know just even talking with JJ yesterday, he was telling me he was working, I think, on a condo, wasn't it, JJ? You're working on a condo. Yep. And, ran a quote. Why don't you share that real quick about you running the quote for the mortgage broker and kind of this scenario? This will be a good intro in.
Okay. So my BNI lender sent me over a quote for a condo, 2020 build, everything's, brand new, update, top of the line stuff. So ran it and based it on, the information that I could find. This is higher end stuff. Sent it over. And last week I got an email back that said, are you sure this is for a condo? Because you're twice as much as everyone else. And my first response was just going to be, yep, it's a condo. Best of luck, and just send it off, because obviously octopus on roller skates like everyone else. But I figured that I want to fight for this one, and I also wanted them to fight for it for me. They need to, the lender needs to explain to the homeowner too that it's not just about price, it's about coverage. So I put an email together that said exactly why I came to that price: because of the size, because of the upgrades, because of the build. I pointed out the fact that we have replacement cost value on the contents. We also have the special coverage A, which gives us broader coverage. And I said that we're basing the dwelling cost at a higher value because everything in the condo, it looks like it's custom. And I sent it off, and yesterday I got a request for bind order. So it was one of those things where I was double the price, but because we proved to the client and the lender that we're offering the best coverage, maybe not the best price, but we're offering the type of coverage that when something happens, this person is going to be able to go to the carrier and say, I need you to fix it, and they're going to have enough coverage to fix it.
Love it. So let's talk about that for a second. And again, some of this is, kind of ties together with it, a little nuanced here, but we're also talking about in general, If we look and we say, well, price is always an issue, it's not always the main issue. Okay. And again, I've encouraged you guys to think about in your personal lives, take insurance out for a second. Are there times you can think of you were willing to pay more for something, whether it was a particular brand, whether it was a particular service, whether it was you fill in the blank, right? And the idea is you were likely, if we talk through this, you were likely willing to pay more at a given time because you saw more value, right?
Verizon.
There you go. We've JJ and myself have talked. Great point. Oh, by the way, let me just share on that real quick. So again, if we tie together real world stuff, I was with T-Mobile for 15 years. Okay. I would say that's a pretty good long-time client. It was like one of my first cell phones and I had it forever. Their service started getting bad in the sense of like reception wise. I started losing reception in my home. Like I couldn't make calls in my home. Well, I switched to Verizon shortly before we bought our cabin up in Georgia. I didn't do it just for that because, I was having a hard time here. But the first time we were up in our cabin in Georgia over winter break, we were at a park and there's some friends of ours from the area here whose parents live up there too. So we have friends up there. We're in the park. My daughter, Abigail, one of her good friends who's right there, her name's Hadley, breaks her arm. She's at the park. She's got some health issues. She breaks her arm. She falls off a swing and breaks her arm. My buddy, this other family, guess who they had as their service? T-Mobile. Guess who got no reception there? My buddy. Guess whose phone now with Verizon was able to call 911 to get an ambulance there? This guy. Right? So there's like a real world example. I switched to Verizon. And frankly, I didn't even care I don't want to say I don't care what the cost was. It was a little bit more. But to me, I wanted that value to know I would have service. And again, I don't know where Verizon is right now, but they should be paying me for this. But, you don't get much better than you're in the mountains of Georgia. You're at a park. It's two families. No one else is around. A little 6-year-old girl breaks her arm and it was a compound fracture. I mean, her hand was like not good. The mom's crying and in tears, and I'm the only one that's able to actually make a call to 911, right? So at some level, the impact of that in your world, which I think is critical, is basically saying you want to make good recommendations to your clients, recommending the better coverage, the higher coverage, because if and when they have a major claim, like in JJ's scenario here, he's quoting against somebody else, they're quoting a third or half the coverage. Well, if we fast forward a year from now and we were to say, well, the client went with the other guy, maybe we need to do a commercial like the other guy, right? He went with the other guy and he had a fire at his condo. He's going to be left holding the bag. With JJ's policy, because it was the better coverage, he would be properly protected. So this is like, again, broadening this a little bit. Always critical to just continue to reinforce you guys. I get it. Everybody wants the least expensive thing. Everybody wants the cheapest thing in insurance. I understand that. We've also talked, everyone really wants to know they're protected, right? And your job is to kind of play lifeguard, referee a little bit and say, listen, I understand you want to get the least expensive price. I'm here to help you try and find that, but I want to make sure you're properly protected as well, that if the big claim happens, you're good. So moving into this more practically speaking, and here's really where I was thinking, what I want to talk about. Let's say we have two quotes. Let's say we've got two progressive quotes. Okay. And let's say the coverages are the same. Here's the scenario I want you guys to think through. The coverages are the same. Like we've got 100, 300, 100 auto liability, 500 comp and collision, 100, 300 uninsured motorists, towing, rental, and all that. What are some of the other levers or things we could do that may make one auto quote less expensive than the other? What can you guys think of? This is where we're going to kind of talk through the tips and tricks.
Client profile.
Say again?
Education. Are they married? Are they retired?
Love it. So we're going to put, so Roy Valentinger, the head of the class. So we're going to put client profile, education. This is a big one, guys. If I put a person has a bachelor's degree or a master's degree, they are going to get a slightly better rate than if they just have a high school degree. And again, I'm not sitting here to judge. You know, I know some people think some of this is unfair. Oh, it's not right. You shouldn't do that. Well, you know, I tell people, look, my goal is just to kind of teach you the game and how it's played. I'm not the one that sets all the rules, right? So you can sit and kind of piss and moan all day and say, well, that's not fair. But the reality is this is what happens. Okay. What else? What else could we think of? And let's hang on that client profile for a minute. So education, what else would we say?
Marital status.
How are the cars rated?
Okay, so we'd say marital status. Okay, what else? Somebody said how the car is rated.
Yeah. So Progressive doesn't care whether it's personal, commute, or farm. They get all the same rating. The only one that they change is business. Other companies, most of them do care and how much you drive. So like Progressive doesn't ask an annual mileage question.
Right.
They just
So
say commute.
But it could be mileage, right? I mean, that's a good one. We could say mileage.
Or use, because you know, the realtor is always a good example of probably uses their car for business. It's much different than just commuting to an office and back home every day.
Right. Okay. What else? You guys are missing a big one on the client profile specifically.
Husband and wife credit.
Oh, Amy Young, winner, chicken dinner.
Woohoo!
I'm going to actually put that first because I will personally tell you this is where I've seen probably the biggest swing on this profile. So Amy, talk to us about that. What exactly do you mean? For those of you playing at home, what exactly does that mean?
Well, some carriers, and there's a few, not all of them, are really big on credit based. And Safeco, my carrier, is one of them. Sometimes putting the wife first versus the husband first, depending, you know, it doesn't hurt just to ask them, hey, which one of you has the best credit score? You know, ask them that ahead of time instead of just assuming and then, you know, having to do extra work later. Just automatically do it because you will definitely get a better rate.
I again, guys, and I don't do nearly as much personal lines anymore, right? I do a lot more commercial. I still kind of poke around. I did rewrite my own personal auto to Safeco last week. I was very proud of myself for those of you tracking. So, although I have not done my checklist yet. So Leanne's kind of on me about that. But anyway, I'm just going to blame it on Craig. No, but I've done thousands and thousands and thousands of these over the years, right? I've been in the business 18 years. I've owned the agency 15. I will tell you personally, this is one of the biggest ones I've seen, right? And it's that extra time to say, you've got a husband and wife, credit is always going to be a factor. Anyone that tells you credit's not a factor, again, they're lying. It is. Now, to Amy's point, some may weigh it more heavily than others, okay? It doesn't mean it's not a factor. So if you've got a husband and wife, take the extra minute to put husband first, try it, wife first, try it, right? Because what will happen is the system will run the credit based on the first driver, the first named insured. And we've also talked about this in the past. Don't assume because you think the husband, you know, perhaps the wife stays at home and the husband works, he's got better credit, or vice versa. You don't know. And I will tell you this, no two credit scores are exactly the same, period. So you can have a husband and wife say, oh, they do everything together. All the bills are together. Everything, you know, they always pay on time. They blah, 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 baloney. You're never going to see them exactly the same. So that's definitely a big one. Okay. So from the client profile, I'm going to highlight that. What else? What other discounts or levers can we pull, if you will, to get the best rate?
Deductibles.
Love it. Okay. So let's talk about that. So explain that, Amy.
I don't think it's a huge difference, but you know, I think every situation's different. You know, especially where there's young drivers involved. You know, a lot of people don't mind, you know, 1,000 out of pocket instead of 500. So, you know, it can shave and chip away. I don't think it's huge, but it can shave and chip away at the premium.
Yep. Here's the other thing I would say, guys, depending on the value of the car is probably what you're going to see.
Yeah.
So if I'm quoting a, you know, brand new 2021 mid-engine Corvette, my new dream car. And my son, who's 5, he sees him. He's like, Dad, that's so cool. I want one. I'm like, get in line, buddy. Get in line. I'm getting mine before you get yours. I promise you that. That's a pretty expensive car. So the swing on the deductible may likely be a lot more than if I'm quoting a 2001 Ford F-150, right? So look at that.
Bells and whistles are expensive.
No doubt. Trust me. So think about that, right?
Here's the thing about that, though, is not every carrier looks at it the same. Safeco doesn't really care about the deductibles.
Right.
So you can change them all around with Safeco and you're going to save peanuts, where Progressive, you do get a big savings on the deductible. And
Right.
I've leveraged that the other way around of, hey, do you really want to save $20 a year to take on an extra $500 of deductible?
Right. So again,
And
all this guys
real-
are saying is this is high level stuff. These are concepts that you can apply with any carrier. Each carrier is going to have its own nuance of how are they going to look at it and how much of an impact will it have, right? But the concept here is certainly the same. Okay. You guys are missing another really big one. What else would we say?
Huh.
All right, don't all go at once. I will. I'm going to put
Doc.
usage-based driving. What does that mean? What does usage-based driving mean?
Leisure, personal business.
Okay, close. So basically, here's the deal. This is the classic for years. Again, I've been in the business 15 years where, everybody says, "Oh, I'm a really good driver. I should get a better discount. I'm really good. Give me a discount." Well, now we've got the technology that allows you to do that. So Progressive was the first that started this years ago. And I don't know exactly how long. I mean, I bet they've had it for over 5 years. All of the carriers we work with now, I believe all of them.
At least 2012.
Okay, at least 2012. All of the carriers that we have now, I believe, offer this at some level. Okay. And this is a concept that you're going to see more and more and more. So, I just Googled Progressive Snapshot just to pull this up easily, although Flo just kind of drives me a little nuts, I'll be honest. But so the snapshot discount is going to look at the distance, the time of day you drive, and any hard brakes. Now, and this has been kind of fun for those of you that are competitive like I am. And I'm going to show this on my phone here. So we just switched to Safeco from Travelers. My rate went up pretty significantly with Travelers. I switched to Safeco. I paid in full and I saved $800 a year. Okay. That's a win, right? When I switched, I signed up for their usage-based driving, which is called Right Track. Now, Right Track, you have a little app here. Okay, some of you may be able to see. And it grades your trips. I will highlight I'm in first place over my wife, by the way. Okay. You can tell Amy that, Amy.
Safeco has a great program.
They do. And it grades each of your trips. And it will tell you, hey, you drove this far, your driving was this, your driving was that. Now, I will tell you personally, of course, like who doesn't think they're a good driver? Oh, I'm a great driver. I do think I'm a good driver. That being said, I'm not going to lie and say I may be a multitasker at times. Just having this on my phone and knowing that Safeco is looking at my butt every time I'm driving for the next 90 days. And oh, by the way, I can save more money, has no doubt impacted me at some level, and also my wife, right? So I've shared with you guys before, in my opinion, those of you that are not quoting this up front and then having the client say, no, I don't want this on my phone, I don't want this tracked, etc., you're missing out. Because I am promising you this, the good agents, the smart people are quoting it every time. So this usage-based driving is big, right? I would highly recommend.
About that.
Huh?
I said, I have something to say about Right Track
sure you
compared to the other companies.
Yeah,
Okay.
preach it, Tony.
So Safeco does not surcharge you. However, since they've switched to the app, they've changed it. So before you got 5%, that was the bare minimum you'd get, regardless of how you drove. You can get up to 30. They've switched it with the app now. You get a 10% credit off rip. You can get as low as 5, you can get as high as 30. The difference is to Progressive or Travelers, and I think maybe Mercury has one too. I know Nationwide has one. Safeco will not surcharge you. If there's anybody to say, hey, they won't surcharge you, it's me, because I did it. My one car that I drove just enough to activate the thing got a 29% discount because it stayed parked for 3 months.
Yeah.
My everyday car got like 11% by the time it was all done. But the point is, I also had a friend who had a performance car, did a big, huge smoky burnout in front of my house, and then peeled off like a bat out of hell. And he did not get surcharged for the whole time he's had Safeco. He just didn't get the best price.
Mm-hmm.
Tony, what did you say about the 10% again?
When now they've switched to the app instead of the little device, the new discount off the bat is 10%, not 5%.
Beautiful.
So when
Well,
somebody
and,
sees the price,
you
if
know,
it goes up, it's not a surcharge. It's just they gave you more at the beginning than they should have.
Right. So,
Well, let
and
me just
thank
say
you, Tony,
too-
of course, for always pulling us into the weeds. I so appreciate that on these training calls where we've got new
Yeah,
people
but-
just trying to figure basic stuff out. But thank you, Tony.
I
Anyway,
was driving from Bradenton to St. Petersburg, probably 500 miles a week
Mhm.
or 300 miles a week, and I still got a discount.
Love it.
At
So,
the end of
and again, you know, we're going to have the one-offs, guys, right?
They're
And I'm
very
kind of being silly about Tony and getting us in the weeds, but you know, what I'm trying to highlight here is if you look historically and you say, how can people save money on their insurance? Before this technology existed, there was no option for a usage-based driving discount. Now there is.
Yeah.
Now, again, there's going to be variations. There's going to be one-offs. There's going to be anecdotal. There's going to be, oh, my friend this or my friend that or whatever. I'm just telling you, if you look at a big picture perspective, you could say, what are some of the things that you can do to potentially help your client save money? This is one. And if you go and say, oh, I'm not going to do it because they made this or they made that, in my opinion, you're going to lose out on deals or helping clients because they're going to go and get a rate with someone else potentially that automatically includes it. And you don't even have the opportunity to help them. So again, this is kind of we're just talking high level best practices, right? Okay. So we're saying usage-based driving, client profile, deductibles. What else would we say on auto? What other things can you think of on auto?
So you mentioned it earlier, Doug, pay in full.
Yeah.
Love it. Painful.
Pay in full.
That's a big one. And honestly, guys, if you look, I'm going to put this up towards the top as well. I think this is one of the bigger ones for sure.
Yeah.
So, you know, here, and I'm going to highlight it. I'm going to pull this is real life people, right? I tell my family that all the time. This is real life. And you guys are my work family. So here's my Safeco policy. If I can pull it over. Okay. So let's take a look at this for a second. If my computer can catch up here. So here's my Safeco policy for me and Amy that I just did. Okay. My premium would have been about, let's call it $3,400. If I paid in full, I save almost $450 a year at $2,950.
Yep.
Right. Now, again, if we look at this on a percentage basis, we're talking that's almost another 12% savings.
Yep.
And one of the concepts I will share with you that I share with clients on this is saying, look, if you have room on a credit card, I realize there may not be, you know, I get it. And I'm not, you know, saying this in a bad way or anything, but there's a lot of people who are like, well, I can't pay that in full. Like I can't write a check for $2-3 grand, whatever the number is. I get that. So what I would encourage you to encourage your clients is saying, okay, do you have room on a credit card? Could you pay it on your credit card in full and then pay your credit card off monthly? And yes, I realize depending on the credit card you have, you may be paying interest on your credit card, but my guess would be the amount of interest you would pay with an extra $3 grand on your credit card is probably going to be far less than $450. So in other words, you're still probably coming out ahead if you crunch all the numbers from a dollars and cents standpoint, right? Are you taking the time just to have that conversation with a client, just briefly? Hey, this is another area you can save, right? And I get it. You don't have to pay this, like I said, ACH check. Frankly, you can put it on a credit card. You know, some clients may say, oh yeah, great point. I've got American Express. I've got Visa. I could do this. I could do that. I'll also get travel points for putting it on, you know, such and such card. Some people may say, no, I can't do it. I can't do it on a card. Okay. Okay. No problem. It's just one of the things you can do. And here's what I'll say. Out of all the different types of insurance we sell, you know, home, auto, commercial, life, benefits, all this is the only one that I see that has any significant impact when you pay in full. The auto carriers historically, and Progressive again, being a trendsetter leader, I think pretty wisely have said, yeah, I'll give you a discount because I want all that money up front. And then Progressive can take that money, or Safeco can take that money and leverage it to, you know, golden parachutes for their CEOs and gold toilets for whatever they're doing. And
they're also avoiding a lot of admin costs, because with auto, every time somebody doesn't pay, they got to send them bills, 100%. They have to notify.
So they're doing all of those things, and they probably know, I'm going to go out on a limb, that the people that do and can pay in full are probably better risks at some level, actuarially. Like when you think about the whole, well, you know, I remember when I first started in the business, I had a mentor of mine say, insurance is simple as you're matching price to risk, right? That's it. Now, that's kind of simple in a way. When you really start to say, well, how do we do that? It's very complex, right? People a lot smarter than me, or think they're smarter, trying to figure that stuff out. But long story short, again, it's one other thing. Okay. What else can we do on auto? There's another one we're missing. Another pretty big one. Come on, guys. I don't do auto nearly as much as you guys. You guys should be killing this.
If they have kids, student discounts, good student discounts.
I like it. That's a good one. So we'll say good student discount. So this is typically youthful drivers with let's say B, what is it? Typically like a B plus average grade GPA or better. Okay. That's not what I was thinking, but that's a good one.
Occupation. I had an engineer like one time and it went down almost $100.
There you go. Okay. So that would kind of go under the client profile. Okay. Just for sake of time, I'm going to say this: advanced quote discount. What does that mean?
Do it like 7 days out. Oh, sorry.
Go ahead.
No, let Kelly chime in here. Kelly, you probably do as much auto as anybody right now. So explain that.
If they pay, like say today, and then you make the effective date and it starts on say April 1st, most are, I think, 7 days out.
Okay.
What?
8 days.
7 to 10.
Thanks, Tony. Okay, so why would they do that? What's the angle there? Why would the insurance company do that?
Because it shows the kind of client you are, that you're on top of things and you're not waiting till the last minute, which means you're probably going to still pay your bills on time, and you're not the guy who's had a lapse or potentially driving around uninsured.
Yeah, maybe. I mean, to me, it's all psychology. It's, hey, I'll give you another discount, pay now. I mean, it's when you look at sales in general and you talk about triggers, like what motivates people to do what they do? There's a couple things. One, you've got fear of missing out. Okay. You've also got kind of a what I would call like a scarcity, if you will. So all of these things are little, in my opinion, little psychological triggers to get people to do it now. That's the point. So they're throwing out a little bit of a discount and saying, hey, do it now. Don't wait. And we know historically people are what? Procrastinators. Okay. People historically wait till the very last minute. So that's one more little incentive to do that. For sake of time, I'm just going to highlight on my own policy, right? Because I want to move on to some other things here, some other policies, right? Accident-free, multi-line, or not, well, it could be multi-line, but also just, am I a homeowner? Okay. And then discounts that my actual car could have based on its safety features, right? So those are all things. Now, some of those things are typically going to be built in. Okay. You know, so if we say like, you know, safety features of the car, that's really going to be picked up by the VIN. But let's think about that for a second and say, you know, somebody calls you and says, oh yeah, I've got a, you know, I've got a 2015 Cadillac SRX. Do you have the VIN? No, I don't. And you just plug it in, which you can. And then they call another agent down the road and they give the VIN. Is it possible that the agent down the road picks up a few more dollars savings for them because they have the VIN, which picks up the full safety features than what you had?
Absolutely.
Yeah. So again, and I'm always encouraging you guys, like, aim for the fairway, right? Don't let both sides of it. You know, I never want you guys to be like, oh, I can't run a quote until I have everything. Don't. You got to start the process. I'm big on that. Like, just start. Yeah, I can get you a quote, Mr. Client. Hey, I just want to let you know, until I have all this info, not going to be 100% accurate. Oh, okay, great. Well, at least you've said that. You follow me? So don't wait to start. However, the more info you can have, the better rate you're going to probably pick up. So we talk about safety features of the car. We also talk if they're a homeowner. So just in general, right? Like, this just says in general, they own their home, right? Now, if you can do a multi-line discount with home and auto, that's a big one. Historically, if you were to go to most other parts of the country, I don't know the statistics on this, but I'm going to go out on a limb and say most people have their home and auto together because of this, right? Because normally they can get a discount for both home and auto. Who do we have that can do home and auto discount? That's at least a possibility.
Progressive, Safeco,
Tower
Tower
Hill.
Hill.
Okay, so Progressive, Safeco with Tower Hill, right, Tony?
Yes.
Who else? Nationwide? Just because they're not doing it doesn't mean it's not a possibility. Okay, in our area. I would probably say your biggest application is going to be Progressive. But here's what I'll also tell you. You want a no-brainer way to pick up some more auto and get things rolling when you're talking to a client and you're working on their homeowner's insurance? Is it a lie to say, hey, I may be able to get you a multi-line discount bundling home and auto. I'd like to get your auto info and run that for you as well.
Yep.
It's 100% true because we do have a handful of carriers that do it. Now, the percentage that we actually do it with, because the home's such a crazy market and doesn't always correlate to the auto, is small, but that doesn't mean it's not true. It doesn't mean it's not a possibility. And I will tell you this, there are areas and parts of the state where you may have new homes, like let's pick on Sarasota. Okay. I have a brand new home. I may kill it with Progressive ASI and may kill it with the auto. I've got an appointment out in Riverview today with a client. You look out in Riverview, look out where Craig lives in Odessa. There's a lot of brand new homes that Progressive ASI would probably kill it on. And that probably would be a really good discount between home and auto. So again, I'm encouraging you guys from the sales perspective. You have a great opportunity when you're talking to a client on the homeowners to take that extra minute, ask about the auto, get the info, plant the seed, start the process. And the other thing that we know, and again, if I look historically where we have not done as well as an agency and we could do a lot better, is just on that. Because here's what I know. Anytime I'm buying a home, I'm moving. What do I have to do with my auto insurance?
Change the address.
I got to at least update it. And oh, by the way, is it likely that my rate's going to change based on where I go?
Yep.
If I'm Craig Balco and I lived in St. Pete for years and now I moved to Odessa, or I moved from Odessa to St. Pete, or I moved from, down where Roy's at, I moved from Miami further inland, there's going to be rate changes all over the place. So your client is going to have to face that one way or another. I love this. This happened to me yesterday. So I was talking to a guy. I'm buying some leads, some commercial leads. Something, Craig, you know about some of these. We teed up some of these for you, but I like getting them too because I want to be in the game. I want to know what's going on. I kind of want to, I like this stuff. Okay. So I wrote a guy a few weeks ago. I wrote him, he needed work comp. I wrote his, I got a lead. I called him. We wrote his work comp that day, like that. Bam, $4,000. Love it. I wish they were all like that, Craig. They're not. But anyway, they're out there. Talked to him that day. You guys, he does like mobile auto detail. Pretty good business, actually. Okay. So I get his work comp. What do I ask him about? Nothing. I just say, hey, have a great day. I'm not going to ask you about anything else, right? Is that what I did?
No.
Hey, what about your business auto? What about your general liability? And then I followed up a few times.
Yeah.
He calls me yesterday out of the blue. I followed up a few times in here from, again, it's like, what can I do? Okay. I'm going to, he calls me out of the blue. The guy's name's Hugh. Hey, Doug, I want to follow up with you on the business auto and the liability, but do you do life insurance? Do you do health insurance? Yeah, absolutely. I can help you with that. And here's what I loved. Here's what he said to me. He said, when we first spoke, you told me you did all kinds of insurance. I have like 5 agents right now. I'd rather have 1. So I thought of you and wanted to call you back because I'd rather have it all with one person. Yes. Right? That's what you want. Okay. That's what you want. And you have the ability to do that. The problem or the challenge we all face is you're Kayla Lamb and doing a quote right now and trying to take care of your dogs and your cat. I'm just kidding, Kayla. I don't know if you're doing a quote right now. We're so busy. We're killing it. I don't know. I'm going to look at our final numbers. This March, by the way, may be our best month of production ever in the history of 15 years of strategic insurance. Love it. Okay. Good stuff. Good problem to have. So part of the challenge that you have is you got so much coming at you, so much opportunity. You're just the hamster on the wheel, right? I got to get to this. I got to get to this. I'm no different. I have absolutely failed at some of this. But if you went back in time, or you even went back to the beginning of the year, or let's say we go to last year to give us a little more sort of time frame, you said, every client I talk to, every opportunity I have on the home, I'm going to ask about the auto. Every opportunity I have on the auto, I'm going to ask about the home. Every opportunity I have on commercial general liability, I'm going to ask for property and work comp. You get the game here, right? This is like Monopoly. You're picking up more pieces of the board. You follow me? The challenge is to be disciplined enough, have good systems in place so that you can manage that effectively and not be bogged down, right? I don't have it all figured out, guys. I'm just, that's why I feel these meetings are so important to encourage you on that. Just say, oh, wow, that's right. Holy cannoli, geezaloo. Like Frank from the Everybody Loves Raymond says, geezaloo. Like, I've got so many opportunities. If I took a minute and I just consistently said, every time I'm dealing with someone's homeowners, I'm going to plant the seed and ask about the auto because I could have a multi-line discount. It gives you a reason to talk to them. Right. And then I would say, like, I'm talking to you guys about systems. Well, guess what? A lot of that falls to me as kind of the business owner. I get that. I'm putting systems in place to help you with the quotes, to say, hey, you're so busy, you can't do it all. You email quotes you get a deck page, you get a simple fact finder, let the back office support team help you to run those proposals. So now you're like the doctor that stays in surgery, right? Think about that. That's what you want to think about. Okay. So some of this is very practical. I'm talking about, like, deductibles and usage-based discounts, but some of this is higher level. Just how are you running your day? What kinds of pivoting questions are you asking? Are you taking the time to do that? And again, I promise you this, if you put pen to paper, and all of you have been with me a fair amount of time, and you look at your career and you went back over every opportunity you've ever had from a quoting perspective, and you could go back and snap your fingers now and say, I asked every person about that. Is it likely to say your income would be higher? Your sales would be higher. You'd have more on the books. 100%. It's a no brainer, right? It doesn't mean you're going to get them all, but you're going to set yourself up to create that funnel to get more, right? We could play the same game here with referrals. We could say, every time I help a client, am I asking for a referral? Hey, Mr. Client, so glad you liked us. You love us. Give us, Google reviews, all this crap. Great. But oh, by the way, can you think of 3 neighbors that you could refer me to? Because I'd love to reach out to them and see if we could help them. Maybe we could help them save some money, right? Very classic thing from a life insurance perspective. That's like life insurance 101 of what they teach. Okay. So guys, think through some of those things. They're going to help you out. Okay. So for sake of time, this is quite a bit on auto, by the way. I think frankly, auto probably has the most application because of look at all this. Okay. But now let's go and let's talk about home. Okay. So what are the levers I can pull on home insurance to get a better rate?
Wind mitigation.
Love it. Okay. No doubt wind mitigation. And that's probably going to be your biggest, right? Is that safe to say? Would you all agree, those that do it consistently?
Wind mitigation and contents.
Okay. So when we talk about contents, what are we saying there?
How they would like the contents replaced. I always give them the option.
Okay. So we're going to say replacement cost versus actual cash value on contents. I would tend to agree. I think those are your 2 biggest by far. If you're not asking those things, again, you're going to lose to people who are. And I will tell you this, we know this, listen, and we compete against them. And they have a very similar name to us, Florida Strategic Insurance, and they kill it. I mean, they write a lot of homeowners. It's kind of like the only thing they do. I mean, they don't even do a ton of flood anymore from what my understanding. I mean, they do some flood, but they really don't do a lot of auto and do a lot of commercial and do life. They don't do all this other stuff. Although I just found out for Craig and some of you guys that know them, they just started a roofing company, which I think is very interesting, by the way. What do you think? I don't know. Those guys are the entrepreneurial and they're trying to start a plumbing company.
Oh my.
Who knows? Anyway, look, God bless them. Capitalism makes the world go round. Here's my point. You compete against Florida Strategic, you're going to see 5% hurricane deductible, $2,500 all other peril, no replacement cost on contents, and probably minimal coverage on your dwelling. Agreed? Those of you that have ever competed against them, do you think those guys are trained to do that?
Well, they also increase hurricane deductible too.
That's what I said, 5% hurricane deductible.
Sorry about that. Yeah.
Right? So now I get a quote from Florida Strategic and I get a quote for Strategic and Insurance, and they both say universal. And it's like, well, wait a minute. This one company is charging me like $800 more. What's the deal? Now, how many people are really taking the time to look at stuff? Oh, my realtor told me to do this. Click, click, click.
Depends on how close to closing they are.
Great point.
That's
so
where
am I telling you I want us to do actual cash value, 5% win, cheap? No, not ultimately. But what I'm saying is you may have to explain those things to that client. You may have to run 2 quotes and say, hey, here's your least expensive option. Here's what I recommend. And here's why.
you need to explain it to them like through a video, Doug.
I love it. I think that'd be a great idea, bro. And oh, by the way, I'm all about reusable marketing collateral. Like I make it once, I can use it multiple times, right? We've talked about a lot of this before. I've said to you guys, if you want to write her down or today, do you have a why our agency video, right? Like if I pull over my email here, I go to a signature line, I can pull down, I used it the other day and say, hey, here's why us. Here's a quick YouTube video, why us. It's different, okay? Could you do a quick video and say, hey, here's what the other guys are doing. Here's what to look out for. Beware, like beware a dog. Beware, by the way, higher wind deductible, no replacement cost, probably have a limited water damage exclusion. Could have a quick video that you could recycle. You don't have to do it every time necessarily. But now you're thinking like a business person and not just an agent who's taking orders. Okay. That's what I'm trying to teach you guys all to think about. And you've got a way to proactively engage and highlight these differences. Now, are you going to win everyone? No. But if you do something like that, is that going to at least put you further down the road? Is that going to give you more opportunities to engage, to have that conversation, to win more business? 100% yes. Right. And it's just, what are you going to do today that's actually important? Here's a great question. What are you going to do today that could make a difference in your career 3 months from now, 6 months from a year from now. My argument to you would be something like a video like that you could be using for the next 3, 6 months to a year easily, right? Yeah, maybe you run proposals today, you talk to some clients, you do this, you do that. That may not make that difference 3, 6 months to a year from now. So really encourage you guys on that front. So what else on the home? So wind mitigation, replacement cost versus actual cash value on contents. What else would we say?
Monitored home alarm.
Love it. That's a big one. So if we say monitored alarm. Now, what if I say, oh yeah, I've got cameras in my home. Oh yeah, I do that. I've got those cameras. I get the discount?
Yeah.
Got to be monitored. That's a big one. Okay, got to be monitored. For sake of time, again, I'm just going to highlight, gated community, senior citizen. Depending on
Percentage
the
of
carrier.
roof shape.
Love it. I'm putting that up to the top, JJ. That's a big one. Roof shape.
Cash buyers now, and that hurricane deductible, those cash buyers typically want a higher deductible. They're willing to go out of pocket.
You're just saying higher deductible, right? So we'll say higher deductible.
I'm saying it's very popular amongst the cash purchases. There's a lot of cash purchases going on right now.
Yeah, no
That's
doubt.
what all the
Higher
kids are doing
deductible.
today, Doug.
Okay. Anything else we can think of?
Age of home.
Okay. So we'd say, the older the home, the more I'm going to pay.
Yep.
So that's really age of home surcharge, right?
Pretty much. Yeah.
The newer home, better rate.
Yeah.
So some of that we can control, some of it we can't, but some of this is also just a way you can communicate with your clients about what's going on. And again, some of the things they can do. Okay. Anything else come to mind? Oh, that's a pretty good list. Okay. All right. So let's do this. We'll go to the big finish here. I'll be honest. I don't have a ton for it. I'll lean a lot on Craig Balco. Craig, what about commercial? What will we say? Kind of a different animal.
From an auto standpoint or just across the board?
Any of them you can think of.
That's very.
I'm putting work comp mod factor. Okay.
Yep. The safety credits you get, there's the safety credits are 2% of your work comp, and it's basically like we can give them a template for their safety manual and call it a day.
Drug-free workplace.
Yep. Yeah, that's a little more detailed and it's going to cost a little more out of pocket, but
Yep.
that's always a good one, 5%.
So, and again, I know on the call right now, not a ton of you guys are getting in this level of commercial, but this is good stuff to know. And it doesn't mean because you're not doing it right now, you may not come across a case, you may not want to do it. Again, there's great opportunities in commercial. So work comp can be very nuanced. Mod factors, safety credits, drug-free workplace, those are some savings there.
Dividends.
We actually probably have the most, Craig, on the work comp, the more I think about it. What about, so if we say property, so if we say commercial property, guys, things we're always going to talk about, higher deductible, right? That's always going to be one. Just in general, if we think very simply, and I say, I don't care what insurance we're talking about, home, auto, property, health insurance, anything where I have a deductible, the higher I take the deductible, the more risk I take, the better rate I'm going to get. There's a trade-off between you and the insurance company there, right? Wind mitigation, most of them don't give a flip. So those of you that are like, whoa, what about wind mitigation? Good point. Don't really care. Now, maybe we could make a case on condos perhaps, or condo associations, but for the most part, they're not going to care. Now, that being said, maybe age of roof a little bit. Some of this is more from an eligibility standpoint. Okay. The other thing I'll say here, if we look and we say like general liability, and I'll put work comp too, here's a big one that we see is, what are my projected sales or revenue? My projected sales or payroll rather. So in other words, if I'm quoting a contractor and I'm quoting them at $500,000 in revenue, and I'm competing against Wallace Wells, whatever, and they're quoting them at 400,000 in revenue, they're going to have a lower rate. Okay. So that's kind of important to understand up front in terms of, for a lot of the general liability and work comp, they're driven by payroll or sales. So what number I pick is what's going to reflect on their rate. Now, here's the catch. You know, there's no free lunch. These insurance companies, by the way, did you know they're pretty smart? Some of these insurance companies, they're not stupid. Okay. What they'll do at the end of the term is they audit the policy. So no matter what I predict now, a year from now, they're going to come back and say, okay, I want to see financials, profit and loss. I want to see your payroll reports, blah, 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 blah. And then they're going to charge me more. So it's always important, if you guys get into this at any level, you want to get and explain to your client, you know, we want to predict as accurately as possible. We don't want to overshoot or overestimate, but we also don't want to underestimate. Okay. Anything else we can think of commercial wise? I don't know that there's a ton, to be honest.
I mean, on the auto, you know, based on what they're doing. So there's going to be your commercial and there's your service. So, you know, obviously they want to see, the carriers would rather you take your truck and go to one job site as opposed to the HVAC repair guy that's going to, you know, 10 or 15. So that's going to change things.
So we've got that. You know, the business auto, obviously driving record, going to be a factor, not like we can necessarily change that a ton. But, it, you know, again, if we say, if I'm running business auto and I get one set of drivers from the client, and then the agent down the road gets another set, or they leave a few drivers off, that's going to be different, right? So it would be important to make sure, you know, that the driver's list matches, right? I mean, if you're really starting to dive deep into this, if you, and guys, listen, right now on the smaller stuff, you're like, yeah, whatever. But, you know, you're competing, and let's say you stumble across, look, Roy, we've been talking, Roy's got a friend of his that is like a head sales guy at a Nissan fleet dealership, if you will. So he's got a great opportunity to get leads for fleet auto or multiple autos. That's awesome, right? So, you know, the one or two person, not as big a deal, but if we had, let's say, you know, 5 or 10 vehicles with 5 or 10 drivers, the stakes go way up, the premiums go way up. All of this becomes more important. Okay. You know, could we also make the case and say, you know, opportunity to bundle multiple policies with one carrier and perhaps leverage a better rate? There's a lot more negotiating that can occur in the commercial world, guys. I like that personally, because that's really how the real world works, you know, when you really think about it. So, you know, if I can bring to an underwriter or a carrier and say, hey, I can bring you the work comp, the general liability, the business auto, give me a better rate. That's very real. Then I've got my business auto with Progressive. I've got my general liability with Frank Crum. I've got my work comp with AmTrust. I can't sort of leverage some of that. Hey, I'm bringing you more business. What can you do for me? Right. So guys, again, for sake of time, we're going to wrap up now. I hope this is helpful. I think a lot of you on the call probably know this and are actively doing it. You know, Brooke, and I'm so glad you're on the call for you. And from a training perspective for our new team members, I'm absolutely going to save this. This is a document that I want to go out along with the video, because I think this is critical, right? If you can learn these things early on, it's going to help you tremendously. So any other thoughts? Anybody? Amy, Kayla, JJ, anybody want to add anything else? No? Okay. All right, guys. Well, have a great day. Go help some people. As always, dream big and make it happen, crew. See you guys.
Thanks,
Have a good
Doug.
one.
Bye.
Yep.